Hi. Welcome to A Moment in Time with Taylor. Thank you all for tuning in. We are here today talking about Planet Fitness stock. Big shout out and thank you to everyone who makes this channel possible over the last 30 days. Hey Ace, first comment to the broadcast on Periscope. We are live on Periscope and YouTube right now. I am live on Periscope every single day, 7 days a week, for 3 hours a day. Hey Terry, please don't call me that. No, not Siri. I said Terry.
I don't know.
Okay. So some of you may know that since all the Planet Fitnesses have had to shut down nationwide, I believe that the stock price is plummeting, probably in anticipation of a low quarterly report. Now, the good thing for those of us who like to buy and hold stocks as an investment strategy, we like to buy things when they're on sale. So there's a potential it's on sale right now. We're going to look at it and see. Junior, thank you for the first super hearts of the broadcast. Yeah, tidal wave. I don't know what just happened. Hey, Ariel. Yes, I am doing good. Thank you. I hope you are as well. Didn't get to go live as much as I normally do yesterday because it was a very busy day. We're homeschooling. The kids are home from school. Everybody's home from work. It's a lot going on, but I'm loving life. I'm loving it. I'm loving homeschooling. I just have to better manage my time. But here we are talking about investing, which I wanted to do last night. Better late than never. Hey, Alan, I am having a good day. I think yesterday was a little bit lower, but that's okay. It's still about $30 today. So some of you are not familiar with me. Like I said, I'm Taylor. I go live every day, and sometimes I do broadcasts about investing. So the other day we did a quick quick is an understatement. We did a valuation on Google and Alphabet Inc. There's a lot that I can say about investing. So I did put together an investing playlist on my YouTube channel of all the broadcasts I've done that are related to investing. I think that you should probably watch those if you don't know much about investing. So if you're just here to see the valuation, great, but realize that I haven't actually done my due diligence. Like I would, even if the numbers look right today in this broadcast, I wouldn't buy this company until I do my background research, which normally I do first, but when something goes on sale like this so quickly, I know it's a hot button topic. A lot of people want to talk about it and hear about it. And I had a supporter of the channel, Brent, Wolfman1535, specifically request to see the numbers on this. So I'm doing it for him as a friend and a supporter of the channel, but I'm also doing it out of interest for myself. But I wouldn't actually buy the company until I researched their management, until I researched some of the moats that protect them. And I get some of these terminology like moat from... for GoFundMe, you can click the link in my profile. It's nextjuice.com/support. It's on there. Or you can just type in gofundme.com/nextjuice1. That's NEXJUICE1. And that's how I'm paying my way through school. So thank you so much for asking. So these are 3 books that I would recommend to read about investing. So investing isn't something you just start doing. If you are like, hey, I have my expenses under control, I have my cash flow in a really good place, and I have my savings in a good spot, and I have extra money, and I've been wanting to invest it, and I don't know what to invest it in. One of the safest, there are different vehicles in which you can invest. So you can invest in real estate, you can invest in the market, which we're talking about today. And if you do want to invest in the market, I would recommend, now I'm not a financial advisor, I have no certification or qualification to give this advice. I personally invest in a total market index fund. So what this is a company managed by a large financial firm who does this full time. They have time to spend all day, every day, researching what news comes out with what companies, when companies are at a good price, when they're not, when's a good time to buy, when's a good time to sell, all these things. So they do all the heavy lifting, and you basically just buy a piece of the market, so to speak. What they do is they try to best mimic the conditions and They try to buy a little bit of a bunch of different companies, and if there's a more powerful, more dominating company, they'll usually buy a bigger chunk of that company to best replicate the market. So the one that I'm invested in is VTI, which is the Vanguard Total Market Index Fund. I like it because Vanguard is a company that was recommended to me as a reputable company by some of my friends who are longtime investors, and they make a lot more money than I do, so I trust them a lot better than just me, my own judgment, trying to reinvent the wheel. Another reason is because they charge 0.3% for a management fee. So I like to, according to this book here, Financial Freedom by Grant Sabatier, he says that you should really never pay more than 0.3% for managing your finances, because you're already getting a pretty moderate, pretty mild, modest return on that investment. So over the last 100 years, the stock market has increased around 7% per year. So you're going to get about, ideally you'll get 7% per year return on your investment. So if you're paying, 3, 4, 5% to a financial manager, or for management fees, for trades, these different things that you may be doing, keep in mind your bottom line and that profit. Every little percent, every 0.1% that you add on there eats into that profit and into that return on your investment. So you want to keep that low. A lot of companies, a lot of brokerages allow $0 trades of Vanguard in mutual funds or ETFs. So the VTI that I talked about is an ETF. It's an exchange traded fund, which means it's more passively managed than a mutual fund, if I understand correctly. Let me give a disclaimer here that I've only been researching investing and doing this for a little over a year, so I'm very novice and I don't do it full time. I really do this for fun, out of interest, and I'm interested in money. I like to study it, I like to work on it, but it's not what I do full time. So, excuse me. So, maybe my voice will come back. I would recommend learning from people who do this full time, in particular Phil Town. So he does have a podcast with his daughter Danielle Town, who wrote this book, Invested. This one I read first. I recommend you read it first. It's better for novices. And then rule number 1 is a little bit more intense, written by someone who's been doing it a lot longer, speaks the language a lot more fluently. So I like both of these books. So all 3 books I showed you I think are really, really great. The Financial Freedom book talks about a lot of different things you can invest in, from 401ks to Roth IRAs to real estate and beyond. So you can definitely check this out as like an overall view. And this talks about the 3 different levers I refer to because of reading that book, which is expenses, cash flow, and investing. So you have to, in order to have financial freedom, which is some people call it retiring, you have to pull on these 3 levers in different ways. So you want your expenses to be as low as possible, you want your income and cash flow to be as high as possible, and you want your investments to be returning the best possible rate, and also some diversification in there typically, so that you are hedged and protected against certain industries crashing or changing and booms and busts and all the cycle of money, right? So that is where I get a lot of the terminology that I use, and these 2 books, Invested and Rule Number 1, is where I adapted the valuation and pricing strategy you'll see me using today. There are 3 different prices that we pull for each company that we evaluate. This will be our 7th company, I believe, that I'm evaluating personally. Hi, Mom! My mom is watching on YouTube. Hi! Hey, Superfro. And I'm going to show you step by step how I do this. Now, I already have my spreadsheet set up, so I'll show you a completed spreadsheet real quick so you can get a feel for what it's going to look like. Don't freak out, don't panic, don't get overwhelmed. I know you can still see my forehead, but this is what it will look like when we're done. But I'll show you exactly where I get all these numbers from. These percentages here are basically just year over year, just measuring the increase or decrease for these different numbers. So we're measuring what the Town family calls the Big 4, which are net profit, gross revenue, equity, and the operating cash. Here, I'll spread this a little bit so you can see that a little better. And these are pulled right from their financial statements. So we're going to be looking at their annual report, which has the income statement, cash flow statements, and balance sheet. You can also you can pull everything from the SEC, from the reports from the company. Usually they'll have it on their own website on an investor page. You can also pull it right from the SEC Edgar website. SEC is the Securities and Exchange Commission. That is the company that regulates the publicly traded companies, which I'm speaking also to people who only have the financial power to buy a publicly traded company. If you're already investing privately on companies before they even are available for public sale and consumption, this is probably way below your pay grade, the information that I'm sharing. But for the rest of us who don't have billions or millions or even hundreds of thousands of dollars to invest all at once, we are typically going to be buying tiny little pieces of companies. But the advice here is to not buy something for 10 minutes that you wouldn't want to have for 10 years. So we're doing buy and hold long-term strategies. This isn't something I'm going to try to make this money in a couple months or in a couple years even. This is something that's at least 10 years out. Hi, Noah. Sure. So a hedge fund is basically a very large, financially powerful company or a group of individuals that come together. Typically, it's going to be a group that will basically influence the price of a stock pretty significantly, especially a smaller stock, by buying a ton of it at once or selling a ton of it at once. So that's why you hear about it a lot. How that will influence the price of something is based on some of these hedge funds, which have millions, billions, maybe even trillions of dollars. I don't know about trillions, but they basically like offload or they can basically take over a company if they want to, if it's priced right and their timing is right. So for example, what's happening right now with the hedge fund, I have to look up the name. I don't have it off the top of my head, but Twitter right now just had a hedge fund come in and purchase a near majority share of the company. So it's looking, I mean, that's what you would consider basically a hostile takeover, is where someone comes in who doesn't like what's happening with the company right now. They buy a massive piece of it, eventually maybe a majority share, and once they have the majority, they're now in charge. So they get to control the board of directors, the executives. I mean, they basically control the company because they're the majority owner of the company. And even though we're not going to be at that level, we still want to think at that level in terms of, we don't want to buy a company that we wouldn't want to own the entire company of. Right? So we're not just buying something because we think it's going to make us money. We're buying something because we believe in the company. We're putting our stamp of approval on it. We're voting with our dollars, and we're saying, I believe in this company. I believe it's valuable. I believe that it's priced right. And I also believe that it's a good service product. It's useful, right? It's something that's actually beneficial and it has staying power. So it's going to last long into the future. So that's when we talk about the moats. And again, I'm trying not to recap everything I've talked about in the past, but like one example of a moat would be a brand moat. So a powerful brand that's strong and recognizable. These companies typically will last at least 10 years. And the company also needs to have been publicly traded and providing financial reports for the past 10 years, because you need at least 10 years of data to look at to determine a good number in their average return or loss year over year, to be able to take that vote of confidence to say, okay, I'm going to own this for the next 10 years. And 10 years from now, I will have made money off of my initial investment. Hey, Sonam. All right, Ace is listening. Hey, John. Thanks, Salgadoff. Hey, J-Rod. All right, so hopefully that answered your question. Now let me finish showing you. So those were the big four: net profit, revenue, equity, operating cash. We want all of these numbers to be, on average, increasing by 10% per year overall. I probably should have them in a different order, but let's just move on. So other numbers that I need to pull in order to calculate my first price, which is the 10 cap price per share. So price per share is what I'm willing to pay for one share of the company, which is why I need to know the number of shares right above here. But 10 cap just means basically that I will make at least 10% return year over year over the next 10 years. And that's the power of compounding. So you'll see the power of compounding in one of my other pricing structures, but that's really what we're going off of, is we're trying to figure out how can we get a 10% per year compounding return. That's a great company. That's a company we want to buy on sale. They're hard to find on sale because they perform so well, and that's why we're going to look at Planet Fitness today. These are the numbers for Apple that I'm showing you right now. So this is a different company. I personally don't feel this company is on sale right now. It's not a company that I'm buying. Actually, pretty much none of the companies I've evaluated, with the exception of First Republic Bank, which my boyfriend wanted me to evaluate, are on sale and are a good price. But we'll see about Planet Fitness, because some people seem to think that it is. So we'll take a look based on the numbers, not based on emotion, not based on feel, not based on charts, but based on the numbers that we put into this spreadsheet. So the other numbers that we pull are the equity plus the debt, and this will automatically pull based on my spreadsheet, which is the return on the equity and the return on the invested capital. we'll have the depreciation and amortization, the accounts receivable, the accounts payable, the income tax, the maintenance capital expenditures, and we will we will take all of those numbers, we'll add them up, and that will be our owner earnings for the year. And then we're going to multiply that number by 10 to give us our 10 cap price, this is basically the price we would buy the entire company for right now. So Apple would be $743 billion, $743.5 billion roughly, which means we would be willing to pay $162 per share because of the number of shares. And just to give you guys a reference point, Apple right now, as of today, is trading at $250.21 per share. So a little bit over the price that we would want to pay for it. Now these numbers below are the earnings per share. We need these numbers for the other pricing that we do. We also want to check on the earnings per share. We want that same number. We want to see 10% year over year increase on the earnings per share, and then also the free cash flow. Same thing. Everything, all the percentages that you see here, even on the ones I didn't mention, like return on equity, return on invested capital, we want these to be increasing by about 10% year over year, even though I don't really have those numbers down here. We want at least a 10% return. That's a better way to say it. Okay. Then we'll go to our payback time price. This is why we need the free cash flow from year number 1. We have our estimated growth rate, which we're going to base off of our free cash flow here, based on how it has been growing over the past 10 years, so which means we're going to go back. This is 2018. I haven't pulled 2019 for any of the companies I previously evaluated just yet, because I actually don't own any of them with the exception of Twitter, which I do keep track of, but I do need to log the Twitter numbers, but regardless. So I just put a 5% estimated growth right now. If I think it's only going to grow at 5% year over year, then why would I invest in this company? I would rather just invest in the total market, which averages about 7% per year. So realize that it's some extremely low number. It's like 3% of people, maybe it's 30%. It's a small number, less than the majority, significantly less than the majority. Maybe it's 13%. I'm pretty sure there's a 3 in there that can actually outperform the total market by buying individual companies. And these people that are outperforming the market are likely studying this full-time. This is their full-time job, 8 hours a day, reading news that comes out on these companies, running these numbers day after day, listening to the quarterly conference calls, listening to every report that goes out, reading the tweets from the CEO, I mean, everything. So if you're not really trying to do that, again, the total market index fund is the easiest way to just get into the market, get invested, and to have a pretty safe bet. All bets, there's no such thing as a safe bet completely, right? It's a gamble. You never know for sure what's going to happen in the future, but you'd be better off buying the entire market than buying one individual company based on a hunch, which is why we look at these numbers, because if a company is performing really well and it happens to go on a fire sale, then you might be able to be in that small percentage of outperforming the market, but the chances are against you. The chances of you outperforming the market are extremely low, so just keep in mind that it's usually more advisable to buy the total market. Hey, Josh. You know it's in the title yet. Walmart stock at all-time high. So we definitely don't even want to look at those numbers, because there's no way we're going to buy something that's at an extremely high number. You always want to buy low and sell high. The best app to buy stocks. I've used Robinhood before. Robinhood is a free app. I don't know that it doesn't have a very long track record, so it's a bit risky, and I mainly use E-Trade. So because I'm using because I'm purchasing VTI primarily, I don't, E-Trade allows you to buy Vanguard. Oh my God, yes, thank you so much. Who was that? That was so awesome. Oh my God, what just happened? Sorry, I just got distracted because someone just sent $100 to my GoFundMe page. Thank you so much. Oh my goodness. They contributed anonymously, so I'm not going to say the name of the person. You can make yourself known if you want. You certainly don't have to stay anonymous, but that was really unexpected. Thank you. A million. Thank you so much. I really appreciate that. That also means that I have to do a dare, because every $100 I get on my website, I have to do a dare. So thank you, anonymous. Thank you so much for the $100 contribution. I appreciate you so much. Thank you. Oh, wow. Well, that turned this day well, I mean, my day was already going well. I don't know what I'm about to say, but that just made this day even better. Yes, so the Google hedge fund definition, hi John, is hedge fund. This is from my mom on YouTube. An investment fund that pools capital from accredited or institutional investors, invests in a variety of assets, often with complicated portfolio construction and risk management techniques. There you go. There's the technical definition. Thank you, Mom. All right, so that was awesome. Thank you. Hi, Laura. All right, back to work. Sorry, guys, I got really excited about that. Okay. So we have Apple here. So again, like I said, if I really thought it was only going to grow 5%, a lot of times I do this because I want to show you guys how I run the pricing structures. If I really think it's only going to grow at 5% per year, I'm not even going to do this, right? I don't even care because I would just rather invest in VTI rather than this if I think VTI is going to grow at 7% and I don't have to do any work or tracking. Because if I'm going to buy an independent company like this, I have to keep very close track of it. Like I just said, all the news and all the reports and all the calls and all the management, anything that changes, the board of directors, and it's a lot. So it's something that, you only do if you really enjoy it, and that's why you want it to be a company you really love. So I mentioned a bank that I think is on a good fire sale price right now, and if I loved banks and I loved this bank and I was all about this bank and was happy to read all its news and quarterly reports and everything, then maybe I would purchase that, but I don't. So my boyfriend does, so he can go buy it if he wants, but in terms of my point of view, my circle of competence, the banking industry isn't something that I fully understand and grasp. I don't work with banks a ton, so I personally am not really interested in that. That's why I like Twitter. If you don't know, I said it already, I go live on Twitter on Periscope every single day, and I have for over 3 years in a row. I love this app. I use it all the time. I love learning about Twitter. I love reading their reports. I love hearing their quarterly calls. I love figuring out what's going on with them. I'm passionate about it, so I can invest in that company and stay abreast of it a bit, rather than something like if I was investing in like a timber company or lumber company, then I'm like, well, am I really going to sit here and read pages and pages and pages and pages and listen to a bunch of people talk about different types of wood all day? Probably not. All right. Are you on Android, Laura? If you're on Android, then it'll be the same for you that it's been for months. But what do you mean looks the same? Apple. Let's see. So I view Laura's profile. Hey. Oh, no, wait. I can only see it when I go portrait mode, I think. Yeah, you joined September 2015. And it says you're followed by Saul and Sonam, Trudy, and 25 other people that I follow. And I see 53 broadcasts. So I know, Daniel, I heard that the 18-month thing this morning. Yeah, that was an intense number. I'm on Android and it looks awesome. Yeah. Where does it say that? In the profile right there. When you view profile. If you're in landscape, you won't see it. You have to go portrait. Try that. You would just view my profile like normal, like click my name. Yeah, Daniel, you can watch me for the next 18 months. I love it. Yeah, I do go live every single day. Rain or shine, virus or no virus, I'm here. And you guys saw me get sick. I don't know if it was a coronavirus. I assume it wasn't, but I was sick for about 9 days, and I still went live every single day for 3 hours a day. It was rough. I was blowing my nose a lot, but I was here. Hi, Mike. Nice flamingo. Okay. So this you take the free cash flow, you estimate the growth rate of that free cash flow per year over the next 10 years. 8 years, actually. I don't know why it's 8 years. I just follow whatever the book says. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So you start with 1 and then it's 8. So that would be $140. So we had our 10 cap price at $162. Our payback time price, meaning that in 8 years we would get it would be a worthy investment, right? So that we would get be willing to pay $140 per share. And then the margin of safety price, a reasonable price is $140. And what we really want, we want to get it on a fire sale, which is 50% off for $70. So like I said, Apple is like $200 something right now. So it is not on any type of fire sale, not even close. So we would not want to purchase that one. Now let's get into Planet Fitness. So this is what my spreadsheet looks like when it's brand new. And that's weird, Laura. Yeah, maybe. I don't know. Which is completely blank. Everything is at 0 right now. So I'm going to show you step by step, like I said, exactly how I get these numbers. So here's the 2020, I think February 2020 report for Planet Fitness. The date will be on here somewhere here. Let me just look it up here. So this was February 28th, 2020. So this was not too long ago, just a few weeks ago. And it should have the 2019 numbers on it. So I pulled this by going, you can see here, Planet Fitness. So what I did is I just Googled Planet Fitness Annual Report. So just type it in Google, Planet Fitness Annual Report. I usually pull it from the SEC website. It didn't come, the SEC website was pulling the 2015 results for some reason. So I did go to Planet Fitness's page that popped up as well. It said investors, SEC filings. So I clicked that, and you can see the link there at the top. No, you can't. Sorry, it's cut off because of the way that I crop this. It just says investor.planetfitness.com. And then what was weird though, when I got to this page, it had defaulted this year to 2018. So just make sure you're looking at the most up-to-date year. So I had to change this from 2018 to 2020. I don't know why it was on 2018 instead of 2020, but here we are. And then I just scrolled down, and what I looked for was the filing type 10K. The annual reports of the companies are known as 10K reports. So here was the most recent one, and then I clicked PDF, which brought me here. Hey, Big Worm. Yes, you have to have passion and enjoyment about your investment, and it has to make sense. Yeah, it has to have meaning to you. So thank you. Thanks, Big Worm. Namaste. I joined January 5th, 2017. Everyone loves fire sales. Yes, exactly. You want to watch me dance again? You're a creep. Okay, so where are we? Here. So we're going to, now normally I would do a lot more research. I said this in the beginning. I know some of you guys just got here. Normally I spend hours researching a company before I run the numbers, because if I don't like the company, if there's something I read about that I'm like, no, it's not really for me, then I won't actually invest in it. This is a special occasion because my friend wanted me to do this, Brent, who's also a supporter of the channel, and excuse me, keep losing my voice here. I'm talking a lot today from homeschooling. And it is on there's something weird going on right now, so I'm kind of going to run the numbers for you guys who have already done the research on the company. You love Planet Fitness, you've been waiting for your chance to buy, but you just don't know what the price you want to buy it as. You can use these as a rule of thumb. You may not, it's not my strategy, this is Danielle and Phil Town, and you can run your own numbers however you want. You can also look online. There's a lot of different professional investors that will recommend you buy, you hold, you sell. And right now there's a predominant urging to buy Planet Fitness, it seems, like when you look on like tipranks.com. So is that what it's called? Tipranks? Something like that. So now I'm just, wait, you guys can't see this. Okay. So now I'm just scrolling down to go to where you start to see the numbers. And they're always in these blue numbers, which is nice because it kind of shows you where to stop. But like I said, I would want to read all this stuff that I'm scrolling past. I would actually read that if I wasn't live right now. I wouldn't make you guys sit here watch me read a bunch of this stuff, but I would want to read all of this before even pulling the numbers typically. Okay. So here we have the numbers for the last 5 years, 2019 through 2015. And we're going to plug the important numbers that we need into our spreadsheet. So we're going to look for net profit first. And this is interesting. So we have net income, but then we have less net income attributable to non-controlling interest, and then net income attributable to Planet Fitness Inc., which is odd. But we're just going to pull the net income. And as you read these more and more, there's always like weird, every company has its own weird thing. The other day we were, 2-3 days ago, I think we were studying Google, Alphabet Inc., and it turns out that they split your Google stock, Alphabet Inc., into Google, G-O-O-G-L ticker, and G-O-O-G, Goog. So there's like Class A shares, Class C shares, and there's also Class B shares. And the Class B shares are not available for the public. They are owned primarily by the owners, Sergey Brin, Larry Page, and someone else who I forget his name, sorry. So that was odd to me. I had never seen that before, and it was very confusing. Like, even to just figure out the number of shares to put into my spreadsheet was a gray area, which is actually a big reason why I decided I would not buy that company based on that alone. If it's too complex, and I'm not going to sit here and spend hours trying to figure this out, and they're splitting things, and there's multiple classes, and I can't buy some shares, and those shares are those, should I count those shares as part of my shares or not? It was just, to me, at the level that I'm at, investing for a year, I'm like, forget it. You know, I'm not even going to bother with that. Instead, I'm just going to focus on other companies that I have the capacity of understanding. It's within my circle of competence. I'm competent enough to understand this company, and if I can't, then I'll just leave it to the total market index fund to purchase it if they think it's reasonable to do so, which they are. Vanguard is one of the largest owners of Google. All right, so back to here. So we're going to look on this line right here, the net income line. And we're going to go to the top and just make sure, yep, the more recent numbers are on the left. Always double check that, because some have the more recent numbers, like the 2019 numbers on the right and the older numbers on the left. My spreadsheet goes the same way as this, with the more recent numbers to the left and less to the right. You guys may have remembered, if you were here the other night, Google did it the opposite way. So we had to be really careful to make sure we were plugging in the numbers correctly. So here we go. So, oh, and I also want to show you at the top, it'll say in thousands. Okay, so these numbers are in thousands. So it's not 223,000, it's actually 223 million, because you're adding 1,000 on the end. And I like to put the zeros on the end because I don't know why, I just like it. Okay, 135413. And when we were studying Alphabet and Google, the numbers were in millions. So we were adding 6 zeros to the end, which is a big part of the reason that I like to use the zeros, because it gives me some perspective as to what kind of numbers and what size company I'm really dealing with. 103162. 55601. Oops. I'm going to close this part down now. Actually, you know what? I probably do want that page open, so I'm just going to move it to the end here. Let me just close this page so I don't accidentally open it in front of y'all. Oh, thanks, Big Worm. Thanks for coming in. Appreciate you. I feel like my mom should be a moderator. Add moderator. Okay, Mom, if you're still here, you're a moderator now. All right. So we're on to 2016. So 19, 18, 17, 16, 71247. So you can see a decrease here. So it actually went, their net profit actually decreased by 22% that year. We're not sure why, but the fact that the numbers are positive, that there is a net profit, is always a good thing. I definitely, I think Twitter was one where they did not have earnings and profit for a while. All right, then 38130. Pop quiz. Does anyone remember how many years back I said we should pull information from? Was it 5 years? Because we have 5 years of data right now. Does anyone remember the number I said of how many years of data we should pull? And I'm going to keep pulling numbers while you guys guess. If you want. I'll tell you eventually. All right, then we have our gross revenue. Josh just said, nope, I do not recall. So our gross revenue is up here. Wait, franchise segment. We have franchise revenue. Oh, no, here we go. Total revenue right here. This is what we want. Get the feeling peeps might be on an upswing next month. Way too much debt for Planet. 1.888 billion. I'd short it. Should I invest in chocolate eggs? Hi, Gasman. Oh, that's what you were saying was going to be on an upswing? I don't know if you should invest in chocolate eggs. I don't even know how you would do that. All right, so we have 688803. And we're going to put the equity plus debt on this line down here. So if you're interested in seeing what numbers we come up with, you can do that. Whoa, hang on. I'm doing Google numbers here. We're at Planet Fitness level. We're a little bit lower level right now. 572898. $429942. 378241 and 330537. These numbers are good. So this is a more than 10% increase in revenue year over year the last 5 years. And nobody guessed the correct answer. So the answer was Cadbury. The answer was not Cadbury, but I guess that's how you can invest in chocolate eggs. What are you moderating? You don't have to moderate anything, but on YouTube, you now have the power to like mute a comment. So if you see someone saying something inappropriate or rude or something, you can mute them so they won't be able to comment anymore. So it just gives you like that little blue wrench next to your name, makes you look special. Because you are special, because you're my mom. The answer was 10 years. So we want to pull back information from 10 years. And we technically, following the strategy that I'm talking about today, we would not invest in any companies that don't have at least 10 years of data available. So if a company just went public, like people want to get in on these IPOs, that's a big gamble. It's a much more riskier gamble because you don't actually know. When they come out publicly, they do usually announce like the last 2 or maybe 3 years of financial information, but that's not enough. We want 10 years. 10 years is the answer, okay? So even though I have 5 years here on this report, I am going to have to go back and pull previous year's reports to get the 5 years before this so that we have 10 years of data to pull from, because maybe they've had a good 5 years, but the 5 years before that they were really struggling. So we just want to have not as big of a picture as possible. We're not going to sit here and pull 30 years of information, but we want a little bit more of a big picture, right? Not just 5 years, but 10. So now to the equity. Oh God, why did I have to do that? Let me just stop. Let's just go back to where we were. It's usually right around here. Are these matching the numbers we have? Yeah. Okay, I was just curious where that net income was coming from. Okay, I see income tax, but let me not get ahead of myself here. These are percentages. This is odd. Always good to get comfortable and familiar with the reports that the company you're looking at uses. You can pull a lot of this information from like the NASDAQ, but for some reason I enjoy looking at it this way to see how it differs between different companies, because they're all very different. Some of them, I mean, I would have already had the information I was looking for on some of these other companies we've looked at. Okay, so here we're getting in here to, we have liabilities and stockholders deficits. So where's our equity? Ooh, see, equity is at a deficit. See, this is what the person was talking about. Hey, life. I'm investing in sanitizer and Lysol. A broad range of information. Yes, Chris, exactly. Total stockholders deficit. Wow, so they're not even calling it equity because it's actually a deficit. I like that. And look, they do have 2 different types of stock, Class A and Class B. I'm just kind of looking at all of this. Okay, so their equity is actually a negative number. Let me look down here. Yeah, okay. So that's interesting. So typically this would say total stockholders equity, but they're actually using the term deficit here because right here, as you can see, stockholders equity, aka deficit. So there actually isn't any equity. There is no equity. It is negative numbers. So that's what that person was saying, that this company has way too much debt. So even if, you know, they're reporting income, they're reporting profits, well, if they had to liquidate, you know, so if you're looking at a company, you might want to buy this company. If stuff hits the fan and everything goes wrong and you have to liquidate the company and the business and sell everything, how much money are you going to get? you pay off all the liabilities, sell all the equipment. What do you end up with? If that's a negative number, that's not great. I'll put it that way. All right. So, but regardless, let's just put the numbers in here. So we have minus 707,754, which is odd too that it's only 2 years. That's not actually that odd. That happens a lot with these companies. They only report 2 years of these for some reason. 382,789. Oh, and then I struggle to have a negative here. Yeah, because that's actually bad. So the equity is decreasing. So see, this was calculating, it was an 85% increase, but we have to make sure we pay attention to these numbers because the number became more negative. They were down, they had a negative almost $400 million equity, and then it went even more. They added another $300 million in liabilities, which is the opposite of what we would want to see them doing. So this went down 85%. That is huge. We want to pull the other numbers still, but this number alone might be enough to just scare me away from purchasing this company. I don't want a company that's almost $1 billion in debt, basically, which is exactly what that guy was just saying. So good call. Let's scroll. Let me give that guy a shout out because I think he's correct about this. Bobby D99. Big ups to you. All right, then we'll get into operating cash. Might as well finish running the numbers for good old Brent. Good old Brent. All right, operating cash. Cash. So now we're looking for the cash flow statement. This isn't that, right? This is the balance sheet, I believe. Yeah, so we're looking for cash flow statement. Is it one word? What do they call it? What do we got? Selected financial data, financial statements and supplementary data. Why isn't that? Okay, item 8. Page 71, let's see what we got. This is our balance sheet. What's this? Statements of operation. Interesting. This might be actually what we're looking for. Comprehensive income. Hey Steve, how's it going? Oh, here we go. Statements of cash flows. Here it is. Okay, this is what we want. I call it a cash flow statement, they call it a statement of cash flow. Whatever works. And I'm looking here at the titles. If you're like, what the hell is she reading? I'm looking at the title of each financial report. So here we have cash flow from operating activities. Let me just quickly check something. Okay. Not watching the Donald? I'm not. Should I be? All right. So we have cash flow from operating activity right down here. I can't see because my phone's in the way. Here we go. Net cash provided by operating activities. Is that what I call it? Operating cash? Yeah. So that's what we want. This number right here. So we have 3 years of data on this one. 204311. 184399. And 131021. And finally, we're going to pull our equity plus our debt, which I probably should have just pulled while we were on that other page. Oops, that's Apple. Which is up here? Nope. Here. Which is liabilities and stockholders' deficit. Here. Total liabilities and stockholders' deficit. Whoa, that's a lot. That's a lot. Okay, so 1717190, 1717190, and then 1353416. So our return on our equity is minus 19%, minus 27%. These are not good numbers. Return on invested capital is also should probably be negative. What is this based off of? Whatever, it's fine because it's less than 10%, so I don't even care about it. So depreciation and amortization should be on here, I believe. Maybe not. Nope. It's on... Let's just look it up. Depreciation and amortization. Right here. 44346. Nope. 35260. 31761. 31502. Oop. And 32158. Accounts receivable. This is interesting. It has a little note here. Net of allowance for bad debts of 111 and 84 at December 31st, 2019 and 2018, respectively. What does that mean? What does that mean? I don't know what that means. Let me see what the next... Oh, what is this? Changes. No. Back up. I don't care about changes. All right. Well, I'm just going to use these numbers. 42268. And 38960. I use E-Trade. Alright, so we have accounts payable. Just right down here. 21267. And 3428. Income tax. I saw that earlier, but we're ready for it now. Income before income taxes. Wait. What is this? What? No, crap. No. This is not what I want. Why is there so many words? Okay, forget this. I don't feel like waiting. Let's go back. Where were we? Get out of here. 71. Hey. 71. That's where we started here, right? Yes, okay. Yeah. Whoop. Let's just look for it ourselves. Because it's like starting at the top of the page. Income tax receivable. Is that what I want? Income tax receivable? Income tax. Provision for income taxes. Provision for income taxes? I really wish all these companies use the same terms for everything. It'd be so much better. Now this one's, oh, this is changes in income tax. I don't care about that. Let us use income tax receivable? What do they mean receivable? Receivable? Provision for income taxes. What? I wouldn't, Steve. I would not. They're counting it as an asset. Income tax receipt. Why would they receive income tax? Let me see what Apple called theirs. Apple 10K. Well, let's do it. Annual report 2019. Perfect. Provision for income taxes. Hang on, you're not seeing what I'm seeing. Okay. I just gotta see, like, under what? Income before provision. Provision for income taxes, no. Deferred income tax expense. Cash paid for income taxes. No. What did I use? I have a headache. Okay. Let's see, what number do we use? Income tax. We had 13372. Provision for income tax. What is this under? Statements of operations? That's not even something I normally look at. Interesting. See what happens here. This is what I look like right now. Is I pull it from like the NASDAQ or whatever, and it's just whatever they put. So, let's see if I can give you an example. Excuse me. Dude, why is their cookie thing so huge? Yeah, so here, I'll show you. Here's the NASDAQ. I pulled Apple up. You can look at their income statement, their balance sheet, their cash flow. It's on the income statement. Right down here, income tax. The numbers are here. So I never really saw how they put it on their own report. But apparently it's income tax provision. Okay then. So back to Planet Fitness. So income tax provision, that's what we want. Income, oh, nope. Tax, oh, why can't I type? Tax provision. Hey Chip. Chip, what? Why you do this? Alright. Take a deep breath. This is the income statement, right? What's this? This is a balance sheet. That's not it. This. What's this? No. Wait, did I go past the income statement already? Where'd it go? Why don't they call their thing normal words? I don't understand. Okay, it's coming. Oh, this. Oh, this. What are they? They don't even have a title for this. This is your income statement. What the heck? Put your name on it. Alright, it's fine. Income. Where are we? Tax. Net income. Where's my... What the hell? Income tax? Why? Income, oh, here. Provision for income taxes. Here it is. That's why. Instead of income tax provision, it's provision for income taxes. Alright, we found it. We got there. I knew we would. 37764. Have a little faith. 28642. 37. What the hell? 373580. Why so much? Why so much? What the heck? That is odd. 18661. And 9148. Maintenance, capital expenditures, maintenance, capital. Oh my god. How about capital expenditures? That looks good. That looks like a word that they actually use, like a normal company. Total capital expenditures, they just plop it down here. Like, what is this even? Why is this not on the other sheet? What is up with this company? Why? Why don't you have it up here? Oh, wait. It should be on here. Bye, Ace. Alright, what does NASDAQ have to say about this? I've had about enough of this crap. Planet Fitness. Yes, I do. Wait, why am I looking on the income statement? This should be on the balance sheet. What? Is it on cash flow? Capital expenditures. There it is. Whatever, I'm just going to take it from here. Go the easy route. Alright, so we have minus 57890. Let's bring this a little bit closer here. 40860. Oops. 37722. And 15377. Whew, we're almost there. Now we need the number of shares. Planet Fitness shares outstanding. Typing in all caps. Let's pull two sources. Make sure they match, because sometimes it gets weird. Like with Google. Does NASDAQ like not know what I'm looking for? Get out of here. Okay, macro trends. Also not a number. What is happening right now? Why would, this is hard for me on Google too, like what? Yahoo. I'm good, Ron, I'm all good. $77.9 million shares. Sure, let's just go with that. I'm not gonna buy this company anyway. Alright, this one's for you, Brent. 77.9. 779. Oh, here. Okay. 779. We're just gonna assume that it was the same all these other years. Let's go back. So 10 years we want. We don't need these other two. Okay. Thank you, Brent, for the super hearts. Yay, Brent is here. It's happening. Oh, snap. Look at that number, Brent. Ooh, that's the number you wanted to see. Now, personally, Brent, now, did you just get here? Wait, can you see me? Yeah, okay. Did you just get here? Because if you did, here's the main reason I will not buy Planet Fitness. Look at their equity. Minus $700 million. Give you a comparison. Apple's equity, $107 billion. They've actually never had a negative equity, at least not in the last 10 years. So when we look at Planet Fitness and we see minus almost $1 billion in equity, and that's decreased, almost doubled from the year before, 85% more liabilities added on in 1 year. That's not the numbers we want to see. That's not at all. This is not good. So this to me is not great. Revenue looks good in terms of numbers. Net profit is also looking pretty good. But that equity is just painfully horrible. Really, really bad. Really, really bad. I don't like it. The return on your equity is minus 19%. So I wouldn't buy it because of that. But the other numbers do look pretty good. So if you're feeling like you want to gamble today and the casinos are closed, be my guest. All right, we have one more number to pull. Free cash flow, and then we're done. Yeah, that's true. That's true, Chip. One of the kids said that he wanted to play that for music class for homeschooling, so we'll let him if he would like to. All right, so free cash flow. You know, let's just pull it from here. No, not here. No, crap. Hang on. I think I had the NASDAQ on this page and then no. Where did I? Oh, no, it's over there. Yeah. This. Here. Okay. I have like 10 million tabs open right now. Alright, so we have cash flow. We want the free cash flow. Net cash flow? Wait, what is free cash flow? Why am I like having a moment right now? Wait, this is just... Oh, I deleted it and I shouldn't have. B8 plus B17. That's what I thought. I was like, wait a minute, this isn't a number on here. B8 plus B17 equals B8 plus B17. There it is. Alright. The poor turtles! Alright. Ooh. Wait, this isn't right. This is an increase. That's actually very good. Because their free cash flow was negative numbers in 2016 and then went to $100 million in 2017. So that's good. That's a good movement. Then you only have 2%. That's not great. It's not a great increase, but I mean, they might be plateauing. These numbers, that's another thing. So if the numbers are very volatile and it's really like it's not a consistent, like, okay, it's roughly this amount % per year. It's like, you know, every once in a while they have an off year, but for the most part it's consistent. When you have like, they had negative money, then the next year they went up by 700%, and then the next year they went up by another 50%, and the next year they went up by 2%. It is, I mean, that is a drastic, like, it is really just unpredictable. And we don't want unpredictable companies. We want consistent producing companies that for some reason go on a crazy sale and we can grab them up. So these aren't terrible numbers, not the worst numbers that I've seen, but I personally wouldn't feel comfortable putting my money on this stock. I feel like it's not predictable and consistent enough. That being said, I'm going to take this number, free cash flow from this year, and I'm going to plug it into this data point here. So, Brent, I would like you to give me a number you would want me to put in here. I do not own Planet Fitness stock. I don't. So, based on these numbers here, and I would have to pull more numbers back to give you more numbers, but based on this, what would you like me to put as an estimated growth rate of the free cash flow? Now remember, if it's less than 7%, you might as well just invest into the total market, a total market index fund like VTI, which is the one I use, the ETF. Billy, no, we have to social distance. We definitely need social distance. Thank you for the super hearts. I'm sorry I missed that, Billy. Thank you. So, you want it to be at least 10%. But if you don't actually think it's going to grow at least 10%, and I don't know if Brent is ghosting or something. I don't see any comments from Brent. Brent, I don't see you. Yeah, he's leaving, coming back in. I'm pretty sure he is ghosting. Brent, if you've said anything since you came in, I haven't seen a single thing you've said. You might need to uninstall and reinstall your app. I'm sorry. I love you. But you can also text me, which would be fine. Am I okay? Yeah. What do you mean? Alright, so Brent, I'm going to just put 10%. Okay? 10% growth rate per year. So there's your 10%, which is the expected growth rate of the cash flow, and then the cumulative cash flow. Oh, these numbers aren't right. Wait. Let me copy this, and then just delete this, and add 2027 down here. Oh, shoot. Wait. I shouldn't have. What's the best way to do this? I'm just going to do it the long way because I don't have a better solution. Oh, here, I'll copy this. Copy you to here. Oh, wait, hey. You, why? Okay, that looks good. Oh, so funny. 2, 3, 4, 5, 6, 7, 8, 9. All right, good. What? Why does it say $0? What did I do to this? Why 0? 0? Why 0? Why don't I want to pay for this stock? E3 divided by F3. Oh, the number of stocks, the number of shares. That's Apple's number. All right, we need to put this number in. Haha. There it is. That's the number. $24. $24. Hey, is that the exact same number? What? No, it's $29. Okay, that's not bad. Because I think it was $24 yesterday. Cramerica? I don't know. I'm not going to do a whole nother one right now because I have to eat lunch and teach more homeschool to my kids. Alright, then we're going to change earnings per share to 174. I love you too, Eunice! Estimated growth, I'll leave this at 10% as well. Well, let's see. How much was that growing? Up 87%, down 22%, up 86%, up 31%. It's actually pretty good. The down 22 isn't great, but let's just say, like, let's just get crazy and put, like, this is just going to keep going up 20% per year. Because now I'm getting real crazy. Yeah, that puts us at a margin of safety price of $24.60. Crazy! Let's see what it is right now. Last time I checked, it was $30. Yeah, it's still $30. $30.68. So it's not quite on fire sale, but it's close. It is close, and I think yesterday it might have been. Let's see. 5 days. Nope, hey. No chart available. What? What just happened? What's happening? It's like, it's going too crazy. We can't talk about this. Alright, the low point was here. 24.45? Yeah, that would have been a potential time to buy it. Yesterday at 1:30 p.m. If you want to buy it, which I don't recommend. But that would be a reasonable price for it based on the numbers that we have. But it's very unpredictable, so there's that. What's for lunch? I don't know. Hi, Matt. Hello. We're going to go to GameStop and get the kids some stuff. So there you go, guys. There are your numbers on Planet Fitness. The margin of safety price, the payback time price, and the 10 cap price. Any questions? Shout out to Matt for being a monthly supporter of this channel and being in my private Periscope group. Shout out to Brent for that as well, and for sending 12,000 super hearts, even though he's ghosting, which is so annoying. Hi, Billy. Hi, Junior. Brent, you can text me if you want. I didn't see you text me. Maybe you are. Chip, also a monthly supporter. Actually, Chip needs to become a monthly supporter. He was, and then we changed the thing, and then he did it one time. Yeah, but we'll figure that out, right? Laura, monthly sponsor as well. Oh my god, all these homies in the group. I love it. Am I getting any texts? Yes, I must be ghosting. You must not have seen anything, but I'm there. Fuck, yes. I see you, but I don't see anything you're saying. I'm so sorry. You probably said so much. That Survivor episode was shocking last night. That Survivor episode was so good. I'm going to do a Survivor episode recap later today. Make your food last. Mandatory 30-day lockdown starts Monday. Fuck's sake. All right, maybe we'll go to the grocery store while we're out. All right, I'm going to go before I get locked into my house with not enough food. And I hope you guys take care of yourselves. Wash your hands. Social distance. Have fun. Add me on Nintendo Switch online so we can play Mario Kart and Just Dance together while we're stuck in our houses. Exercise from home. Watch my awesome dance moves from yesterday. All this stuff. Subscribe to me here on YouTube and follow me here on Periscope. I'm live on both platforms right now. I go live every single day on Periscope, 7 days a week for 3 hours a day, and I have for every single day for over 3 years in a row. Take care. Brush your hair. Don't be scared. All is fair. And love and war. That didn't rhyme at the end. Okay, it's fine. Love you guys. I hope to see you on the next juice. Big thank you to all you guys that make this channel possible. Huge thank you to Anonymous for sending $100 during this broadcast to my GoFundMe, which you can find on the website at the support page. The link is in the description, and I'll draw a dare later. It'll be fun. Chip, thank you for the super hearts. I'm going to go do stuff with the kids. I'll be busy with them for another few hours, and then I'll be live again later with Survivor episode recap. I also finished The Art of the Deal by Donald Trump, so maybe I'll do a book review as well, and we'll draw a dare, and we'll have some fun. Take care, brush your hair. We're going to do a dare. Don't be scared. I'm a little scared. Scared doesn't rhyme with scared. Okay, this has been A Moment in Time with Taylor. I hope to see you guys on the next juice. Thanks for watching. Don't buy it. Don't buy Planet Fitness. That's our takeaway of the day. Don't do it. It's tempting. It's really close to being a decent price, but it's too unpredictable and volatile. Okay, bye.